During the home buying process, you'll be cutting, well, let's just say a few checks. But hey, you're fulfilling a lifelong goal of yours. Want to know where you'll be spending your hard-earned cash? Let's dive in. The first of 4 checks is to convince the seller and their agent you are serious about buying the home. That's called your earnest money deposit. This is a good faith initial deposit towards the price of the home that is collected by the settlement agency when the offer on the home gets accepted. This amount varies from home to home, but can be negotiated as well as credited to the overall cash to close required at closing. Next up will be your home inspection. Now, you may hear of buyers waiving inspections, but there are plenty of benefits and peace of mind that comes with completing an inspection of the home. Here's why. These inspections are done by professionals who have been trained to do a complete assessment of the home's integrity, from the kitchen tile to the roof, to the walls and the windows, and all the way down to the structural components of the electrical and heating. You name it, they check it out. This ultimately protects you, the buyer, from purchasing a home in need of repairs necessary to make the space livable. And if the home is in need of repairs, you'll have a professional report to bring to the table when it comes time to negotiate. The home inspection is paid by the buyer, so you're on the hook for this one. Your third check is for the appraisal. This is a very important part of the lending and buying process. What does the appraisal involve? An appraisal is a valuation of the home being purchased. The appraisal focuses on features of the home such as appliances, cabinets, specialty finishes, or any upgrades the home may have. The appraiser compares the information gathered from your potential home to similar homes in your area to generate the most accurate value. The home needs to appraise at or more than the sales price negotiated in your purchase contract for the lender to proceed with the loan. Appraisals protect the buyer and gives them room to negotiate the sales price if the home doesn't come in at value. Due to the importance of the appraisal, the fee is collected up front. The home needs to appraise at or more than the sales price negotiated in your purchase contract for the lender to proceed with the loan. Appraisals protect the buyer and gives them room for negotiation of the sales price if the home doesn't appraise. Due to the importance of the appraisal, the fee is collected up front. Last but certainly not least, your cash to close is the last check you will cut. You'll need to bring the last of the cash to pay some of the fees you've accrued throughout the process. These line items include things like your down payment, impounds, origination fees, processing and underwriting fees, as well as notary, recording, and title fees. These line items are also known as closing costs. A full upfront payment of 1 year of homeowner's insurance is also required at closing in addition to property tax reserves. This last check you will write will be made out to the settlement agent at the time of closing to finalize your transaction. Your lender should provide you with a closing disclosure at least 3 days before closing to ensure the final figures are accurate. We know it sounds like a lot, but closing costs on a $400,000 loan amount are usually around $6,000. However, it is important to note that these closing costs vary from borrower to borrower. Remember, this is cold hard cash, so be sure to talk to your lender and agent to ensure you are saving enough to cover these costs. Yes. Haley. Oh, I forgot I had this on. I was about to run out.